Good weekend, all. Ira Epstein with your weekend edition of your financial market wrap-up. And this is for Friday. And we're now at the 7th of June, 2024. Hope you enjoy a beautiful weekend. Hard to believe we're right into the beginning of summer. Isn't it beautiful? Unless you're out west. And that heat is unbelievable. You know, it's interesting how the grain markets were all down. They're not building in yet the heat dome issues. We'll see if they get that weather or not, but they got hit pretty darn hard today. And I'm hearing that it could move in over the next 10 days, so we will see what goes on there. As for the stock market today, you know, we had a pretty interesting set of numbers. Let's take a look at those and get a feel. We had the payroll number. Any way you want to look at it, it's a big number, 272 versus 190. And the unemployment rate, yeah, it's up to 4%, but, you know, that's a big variable. It can go any which way. Are people coming out? You know, my age group, a lot of people are leaving. And luckily, what has happened is it's been replaced by what? The immigrants that have been coming to America over our borders, and they're taking a lot of the jobs. So that's helped things. This has gone up. You're up 0.4 on the earnings. A year-to-year over 4.1 to 3.9. And you're going to hear over the weekend, and I want you to read it. I've already written the weekend edition of my newsletter. And there's going to be discussion about the household versus the establishment numbers. Just think of it this way. The establishment of business gets people, those that get surveyed turn in their numbers. They don't know if that guy's working somewhere else or not. The household could have more than one job. So you got to be careful about double counting what's going on. What I don't like, and I'm against this, the Bureau of Labor Statistics is going to have their budget cut. And they're telling us that come 2025, instead of using the 60,000 base of households they do for this report, they're going down to 55. That's a big number. That means you almost have 10% less. No. Let them not get a golden toilet or whatever they're going to do for the pork from the congressman. That's crazy. Absolutely crazy. We want the facts so that we can make the decisions, and they're going to be based on data that we need. So call your congressman, do something. You can't take money away from these stats agencies when they need it, and we're spending money, Ukraine, Israel, the border. I think we can find the money to do the household surveys the way that they should be done. Okay? All right. So coming back to the market, this was a hot number, any way you want to cut it. The people will say, you're wrong, this is going to do this is going to do that. Folks, you trade what you have. Now, what we're going to have also coming this week is Fed Chair Powell. He'll be speaking at the FOMC meeting. With the data he has, he cannot come out and say he's comfortable. So therefore, it's higher for longer. JP Morgan and Citi completely threw in their July ideas of a rate hike today. They've been very wrong. Now you go, how could they be that wrong? These guys have some of the best economists there are. And look at how terrible they were. They were the two outliers. From my point of view, and I don't have anybody working behind me, I think December's questionable, but if you're going to do a number, it would be then. Now, why did I say that? You need 3 months in a row where you're going to have both CPI and labor together doing something to give the Fed confidence. You'll say you don't need that. Okay, I think they do. I think 3 is the number that they're going to use, and I don't see how that can be in time for the September number. Could it be? The door's always open for it. I don't say no. So a small doorway there. The bigger doorway, if a cut's even needed. And if numbers stay like this, there's no cuts coming this year. It stays as it is. Well, that brings up another issue we have to bring here. I'm sorry I'm so lengthy, but it's an important week. I have been asking all week long, every day, I have a problem. If the U.S. stays with higher rates for longer, and you've just cut in Canada, and you've just cut in the euro, which way should you be? The traditional mentality that I come from is the dollar should have been bid, and offers should have come in the euro and the Canada. But that's not what happened until today. It took the jobs report. So I didn't get my answer. I wish I could tell you, today's the answer. No, it isn't the answer. Today came because of the jobs report. But prior to that, I wasn't getting what I wanted to see. The argument is this. If you're the Canadian or the eurocurrency, I'm going to start cutting rates to turn my economy around, and you should invest in me because we're at that point. Whereas the U.S. is waiting for it to slow down, it's going to get worse and worse on the economy. I get the arguments. I didn't get an answer. What I can tell you is even these high rates aren't stopping job growth in the U.S. And if you have job growth, you have demand for goods. If you have demand for goods, I find it very difficult to think that CPI is going to come down. And where are we growing? With the service industries. When you take a look at the monthly close, month's just young, so we don't know where we'll be, but these are new highs at this point in time. The week is over, and this is a new weekly all-time high close. So the sell may go away, folks. Bye, guys. It can't work. That's out of play, all right? You can say it was delayed if the market crashed now, whatever, but in theory, that didn't work. When we take a look at where you're at right now, well, you've got patterns of higher highs, higher lows. Therefore, what do I think? Until the low of yesterday's taken out, this market is still very much in the bull camp. It is over the 18-day average of closes, which tells me that the market has got upside bias, and the resistance is right here at the 54.09 level. So, where are we in momentum? Are we embedding? Both numbers over 80. Week before, not over 80. Week before, not. So we know that we're not embedded. That tells me that when we get to the 5,400 level, I hope we get there, we should encounter some resistance. Now, how many analysts have a 5,400 for their year-end targets? Remember, we keep hearing this if you turn on, I don't care if it's Bloomberg, CNBC, everybody wants to know what your objectives in the market. You're at them for the year. If you go up from here another 45 points. What do you do there? So look for some resistance up there should you get there. When we look at the Dow, it's in middleman's land. Yes, the trend is up. Higher lows, higher highs, but the bias is down as you closed under the 18-week average. You'd have to close over that to get it up, and momentum's pointing down. This is one of the weak markets. The other strong market will be the NASDAQ. Why? Because they have NVIDIA. They have the tech boys in it, all right? And there is going to be a rebalancing now in the NASDAQ where I think it's Monday, it's coming, when you're going to drop certain stocks, Illumina and some of the others, and CrowdStrike's moving in and some more into that area. So you want to pay attention to the rebalancing going on. And remember, NVIDIA on Monday gets a 10-for-1 split. So that should be an interesting day. Will the market get a bid off of that, or will people take their 10 shares and sell some back to the market and say, okay, money-wise, that's all you're doing. It doesn't affect the company. They're not issuing more stock. Higher lows, higher highs, and as you can see, you're right into the resistance and you're overbought. So there's plenty of resistance in these areas and things to look like that, but no sell signals in the S&P or the NASDAQ. The Russell, you get underneath now, 2031.20, my work turns fully bearish. That would be a sell signal. Stops over the high of this week. Looking to see, can you get the market down into the 1969, 1965 level? And you're nowhere near oversold. You're just making your turn to the downside. This is on my sites. I can tell you that is bearish. When we look at the 5-year note, we've rallied up to the 18-week average. Can we go anywhere from there? Well, I am sure that the market's going to be listening very carefully, ears cleaned out, ready to listen to what the Fed has to say. But more important, we're all going to be looking at the dot plot. And now they're going to be able to see the CPI, the members, and they've seen the jobs. What do they plot out? Is there going to be 1.5 the rest of the year, 2 or 1 cuts? There will be some cuts. What will they be? Will there be calls and talk? in the meeting when we get the notes a couple of weeks from now that some members are balking at the idea of any cut this year. We will find that out as well. 10-year note, same thing. So you rallied back to the 18-week average. I call that the line in the sand, as you know, because it's from there the market tries to figure out things. Number two, when a market's down hard and you get what I call a bear market rally, often you go to that number and that's your stall number as you're trying to figure out what to do next. It's exactly what I see happening in those two. Same in the dollar. This chart didn't turn bullish this week on the dollar. You have lower highs, lower lows. You didn't get a sell signal because you closed over the 18-week average. You can negate the downtrend by getting over 105.13, but I can't get on this chart a clean buy signal. Interesting. If I can't get a buy signal there, I'll bet I can't get a sell signal the way that I teach charting on the eurocurrency, and it's exactly what I see. If you take out the 108.15 area, well, you did that now. You're coming right into that, as you can see, problems. But you have a higher high than lower low. I don't see a trade setup. I have sell signals into Canada, but where am I going? My objective, 72.52. Now, for any reason the market gives a rally during the week after hitting that, I'll be looking at it. Part of the question might be getting answered for us by this jobs data that you want to own the currency with the strongest interest rate and strongest economy, which just basic ABC to me, and you want to be short those that are cutting interest rates because their economies are weak. But that's not how the charts were going during the week. In the Japanese yen, a complete failure today. Lower highs, lower lows, still bearish on these charts. Bitcoin, higher lows. Well, sort of double topping up here. Got to be a bit careful. Should this market get through last week's lows, be very cautious. The market takes out 67,080. If it takes that out, you might be headed back into the 64,000 level. Now we get to the differential of Brent versus WTI. All you did is come back to the 18-week average and turn back down in both. Look at how bearish they are. Now, some of this is the Saudis' fault. Some of it's weak economies. The Saudis, or OPEC plus, I call it the Saudis because they speak for OPEC, the way they delivered their potential releasing of the 2 million voluntary barrels a month that has been cut from the market gave the market the impression that they were going to do it no matter what. They didn't make it and say it in a way the market believed, conditional upon some event. So the market built in the worst case scenario, got down this week to the Bollinger Band and up here. I think you're going to attract sellers. I don't like selling into an oversold condition, but on a pure chart, resistance right up at the 100-day average and the 18. And these two could flip-flop this week where the 18 gets under the 100. So I'm still looking at a bearish scenario in these markets. WTI crude, same scenario, same problems on the chart. Gasoline, you're trying your best to hold the 200-day average, but how can you go anywhere when President Biden has said he's got 1 million barrels of gasoline to release on the market if prices go up in any manner? By the way, today the Biden administration put in a tender for 6 million barrels of oil for our strategic reserve. Good job, Joe. He's trading oil. I think he shouldn't be president. I think he should be an oil trader. He's doing a pretty good job with that. Lower highs, lower lows coming down. And I beat him up at the beginning of the year. But in trading, he's an A+. You know, he's done a good job through that. He's got a lot of oil to buy back. Remember how much he released on the market. So you put this all together, and it's going to be an exciting week. We just have an awful lot happening. Now, if you haven't had any of our free offers, if you go to our website under free offers, the page will look just like back here. This just gives you a sampling of what each one of these are. And when you click select an offer, it puts it in a free card card for you. Then you go and you put your name, your email address, and we typically mail it out within a day or two, business day or two, of getting this from you. But it's the profitable traders. It's the brochures we have. And 2 free courses are in here. Pivot points, the Arun indicator, price-time relationship. Then you can get our free charting software to give it a try. We're not going to give it to you, but it is a trial and it'll work. It'll give you the real quotes, everything you want with all that. Away you go. The Linn research will be in there. If you want to choose my research, and I pray you do, you get it. Cycles. More Research Center. We'll reach out to them and get you set up with it. All this. So how do you get it? You go to iraepstein.com. When you get there, you choose what you want. As you come to the bottom of the page, you fill this out. We'll get it, and we take it the rest of the way. What can I say? But you have yourselves a great weekend. This is going to be an action-packed week. We've got lots going on. 3 big companies. I'll talk about that, what's going to happen on Monday. There's all kinds of things going on in the ETFs, and I will see you then. You have a good weekend. See you Monday.